Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Friday, March 10th, 2023. Before I click on all these charts, please click like and subscribe to the Wicked Stocks YouTube channel. Please share the content with friends and colleagues, and check out wickedstocks.com, where we offer a full assortment of analytical videos like the Tesla report and Apple report. We do the daily Triple Q, the daily SPY report. We put out a couple of decent stock picks every week, 10-minute videos. Thursday, we put out one on Marvell Technologies, the chip design manufacturer, S&P 500 index, NASDAQ 100 index, the TLT long bond, so forth and so on. All this you really never see on YouTube. So check us out at wickedstocks.com. So just coming off the January low, we tested channel support, presently in the mid-70s, mid-80s. On the way up, we are anticipating the possibility of topping out at this channel structure here, now in the 140s, 150s. That didn't happen. We closed above it on a good earnings report about 6-7 weeks ago, and that set off a 2 to 3 month objective at 244 even, which, believe it or not, remains in effect. Talking 2 to 3 month time horizon. It's just that the 2 to 3 week time horizon shifted negative about a week and a half ago when we closed below this channel structure, now at 200.75, anticipating a return to that long-term support region that I mentioned a moment ago on the daily chart. That's actually at 148.82 to 157.23. Now, preceding that, and I can show that right here, there is a rising 2/3 speed line today at 163.43. It was a little more convenient a week ago when this speed line coincided with this long-term support, but now I've backed off a bit and called it just 3-star support. In other words, can contain selling through next week, 163.43, and from here we can turn higher. Although this market may well test 148.82 to 157.23 before this sell-off has exhausted itself. So I just want to put that out there. I was close to calling this a session containment, but I don't want to back away from the validity of this speed line. As it turns out, if you follow the daily Apple report, you know that a week and a half or so ago, Apple tested its rising 2/3 speed line. It wound up holding, and here we are back into the 150s again. So this formation, this speed line, can contain selling through next week. And once tested, we can turn higher back into the low 200s again within 2 to 3 weeks of doing so, possibly upward and onward to new move highs as we move into April trade. But let's talk about the day itself. 173.40, roughly right where we settled. We settled just below it. That's actually a 3/8 downside Fibonacci from the January low to the February high. I have it as an intraday resistance level, assuming we open below it. And if we open below 173.40, 163.43 is in reach today, where we can bottom out through next week. If we test 163.43, you may have at a 200 out of the money call that doesn't expire for at least a few weeks. For instance, if we close today below 163.43, then we spend the early part of next week slipping into this zone of what I consider to still be long-term support in the 148.82 to 157.23 region, which can contain selling through April. And from here, we can turn higher again. Once we test this area, I'll still be talking 2 to 3 months out, this descending channel top at 244 even in reach. This is probably a better picture of it because this is the weekly chart with that band of support. Once we test, if we test this 148.91 to 157.02 area, we can within 2 to 3 months rally into the 244 even area, which will be much lower by then. This drops into the 230s over the next few weeks. And so there you have the downside for today. I think I've articulated that pretty well. This is the chart we started with. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's talk this, and this is, I'm looking at the support and resistance on the far right. If we happen to push through 173.40, 180.77 in reach. That is this former channel bottom that can contain as well intraday buying pressures. And if we push through 180.77, then a new descending 1/3 speed line at 185.39 is in reach. So you can see there's a lot going on here. Let me go back to this chart here. You've got a descending channel bottom at 167.07. This kind of underscores the fact that all of the minor points we pick are valid. We don't just grab any old point where we look, we scratch our heads, we crunch numbers, we look at Fibonacci levels, speed lines, 167.07, a mere minor point. I'm basically deferring to 163.43, given the fact that it's a Friday, it's an unemployment report, it's going to be probably a volatile day. And so you need to make room for 163.43, especially given the fact that we've got a bit of a secondary sell signal over the last day or so below 180.77. So 163.43 in reach today. And on an intraday basis, once again to the far right, holding below 173.40 will keep it in reach. If, on the other hand, we push or open above 173.40, 180.77 in reach, this former channel bottom can contain intraday buying. And once again, if we push through 180.77, 185.39 in reach. So in terms of the day trade, the 173.40 and 180.77 region or areas are the most, I would say, the most meaningful. But all of them have meaning. So once again, for the day trade, for the swing trade, just for the day itself, below 173.40, expecting 163.43. Above 180.77, expecting 185.39. 185.39 can contain session strength, and we actually could come off of here again back to 163.43 within several days of doing so. You could consider 185.39 upside, 163.43 downside, kind of our 2 to 3, 3 to 5 day swing trade environment. Buying 163.43, holding out for 185.39, selling 185.39, even going short at 185.39, holding out for 163.43 several days later. But if we do close today above 185.39, the 2 to 3, 3 to 5 day swing trade shifts upward. And that would then anticipate 200.75, this former channel bottom, able to contain buying through next week, and we could come off of there once again. It would be a settlement above 200.75, not going to happen today, but over the next week or so, if it did, then we're off to the races again. 221.25 then expected within a full week. And honestly, if we close above 200.75 over the next week or two, I do think that still targeted 244 even channel top would be just a few weeks away, where we can place a good Q2 high, possibly top out there into later year. Let's cover the downside one more time. If we break or open below 173.40 today, 163.43 in reach, where we can bottom out through next week and turn higher again as we move through the rest of March. We can bottom out at 163.43. So the 2 to 3 week time frame, I think I mentioned this, maybe I didn't. If we test 163.43, you may reach for 200 out of the money calls that don't expire for at least a few weeks. If we do close below 163.43, that's not considered a significant sell signal, at least at this point in time. I really want to consider this area still our bottom picking zone, if tested, that can absorb selling not only through April, but even through the rest of Q2, and from here we can turn higher. It would be, by the way, a settlement below 148.82 in the coming week, 2 or 3 that would tell me we're likely to give it all back and then some with this channel structure back in the 74, 73 to 86.43 region, then considered a realistic 2 to 3 month objective if we close below 148 handle support. But we're a long way from that. I'm not anticipating it, and I do think that 148.91 to 157.02 region is well equipped to absorb longer term selling pressures, which is to say8 through the balance of Q2. I'm going to leave you with this chart today, and I guess I'm just going to sign off. 8 minutes and 45 seconds. I don't like to go 10 minutes or over, so I'm going to leave it at that. Please click like and subscribe. Check out wickedstocks.com. We've got a lot of good information. We offer 5-day money-back guarantee. You just email us within 5 days. I want my money back. No questions asked. All right? Check us out, wickedstocks.com. You have a great weekend. We'll be back Sunday afternoon with Monday's Tesla Report.